Hello guys, welcome to another video and happy new year. So it's a new year, but the lessons are still going to be the same. I'll always give you some lessons that you can use to improve your trading. So my videos are just for educational purposes. So if you want more of these lessons, you can just text me, and then when I decide to take my first group for 2023, you can be part of that group. So but if you haven't subscribed, please do me a favor and just click the subscribe button. All right, so today I want us to look at gold. We haven't checked this one in quite some time, so we're gonna go through this one. Make sure that you stick until the end so that you can follow through until the point where we make decisions as to like what type of trades are we searching for. Because remember, it's very important for you to understand all the steps. It's not about you opening a chart, looking at one candlestick, and then make your decision and say from here I think I should buy or I should sell. That's not gonna work. You need to be able to assess the full big picture, and then from there you can drill it down to your execution time frame and start to pull the trigger there. So here we're gonna start with the monthly chart, and we're not gonna waste time here because these are just the time frames that are gonna give us a bigger picture as like where could this go on a longer run, right? All right, so here is our monthly chart, and from the monthly chart, if you've been on this channel, you'll remember that we've been waiting on this one. We were waiting for it to get to at least here, which is where the support or the demand was going to start, and then from there we were expecting a reaction, but unfortunately it missed that space by a very small margin, and then it took off, right? So now we can see that bulls are pushing up, and they have a chance to going until somewhere there. So that's where they could go up until, and we saw that, oh, okay, we are waiting for it to touch that support, but now all of a sudden we are having this bullish engulfing. That's when you're like, oh, it seems like the bulls have just kicked in earlier than we had anticipated, right? So that's where you need to follow up and continue trading like that. So you mustn't be stagnant, especially when you get these things on a bigger time frame where you just want the direction, right? So that's all that we need here. It looks like the price is trying by all means to get to that area of resistance or area of supply, right? So remember, the price will always move from demand to supply, or from supply to demand, from support to resistance, from resistance to support, always. So from here, the bulls have got a high chances of going up there, but it doesn't mean you should just go open your gold chart and start pulling the trigger. No, you're not going to do that. You just need the bigger picture to say in the next coming a month or two, we have got a chance of going up there. But it doesn't mean we should just shoot up. We're going to shoot up right away. So that's where most people are getting it wrong. So let's move down to weekly chart. On a weekly chart, this is where things start to show that, hey, the bulls here, they are not really that strong. On the monthly, we saw that they were forming some strong bullish candlesticks. The momentum there is very strong. But here, all of a sudden, the momentum was very strong. Like during this time, the momentum was very strong. But when you compare it to this, it's not the same. It's not the same. This move is not healthy because some people, they can trade it like that. But now the problem with people who are trading like that is that they will draw it like this, and they will never know when is the right time for it, when is the time for it to break that. So that's why we don't trade such patterns on this channel. Those that trade them, maybe they understand them better, but I've tried them myself and I was like, no, there's something more that I'm missing, because you can have a third touch and then you expect it to break, it doesn't break. So that's why I stopped going that route. So here what we can see is that the direction, we are bullish, definitely bullish, because we had a very bearish trend that was running for a very long time, and we were moving like that, and then we moved above these areas of resistance, and now we are going to the upside. But at the same time, when you're going to the upside, it means the nearest area of resistance on this time frame is this one here. This is our nearest area of resistance. And now, since we are saying the price is doing something like this, maybe when it gets to that resistance, the force from that resistance, and also you can see the bears already, they are trying to try and reverse the price, because of what you can see, they are giving us what we call bearish rejection candlesticks. It's the bears pushing the price down, but it's not enough because the bulls still managed to push up with this candlestick. But at the same time, you need to keep in mind to say that as much as the bulls are pushing up, but it's not a smooth move. Like, it's not a very convincing move like when they were forming these candlesticks, because when they were forming these ones, it was just the bears were nowhere to be found. It was just the bulls pushing up like that. The trend was very aggressive. It was just the bulls being in control. But now all of a sudden, the candlesticks that we are seeing, they are suggesting that it's not only the bulls that are pushing up, the bears are pushing against that, which is why we end up with those pin bars there. And now in this case, we are saying maybe the price, when it hits this area of resistance, it will find more sellers that will help the ones that are pushing here to the downside, so they will have more force to the downside. Maybe that's where they will give a bigger pullback. But we're not going to go and sell immediately, simply because the trend is bullish. So if you are planning a bearish trade or a sell trade, it needs to be with confirmation, simply because it's not going against the trend. That's if you're trading on the weekly. So that's all that we can see on this one. So the nicest area of support of all time was this one here. When we are coming down, if you watch the two previous videos that I made, we were anticipating it to say, should it go back there? This is gonna be the like, we're not gonna miss this one. Should it go there, we are definitely taking it, because we were saying this support, what it did when the price was going down, is the one that pushed the price up, breaking that bearish trend line and also breaking areas of resistance. So it's a very strong support. The day the price comes back here, we will never forget what this zone did. So we'll still look for trades from that. We still look for a pullback from that. So, but for now, we are saying we are looking for a short-term sell trade, but it has to be with confirmation. We are saying it's short-term because the trend is going up and we are trying to take a trade to the downside. So it can't be long-term. It's a short-term trade. So now let's do daily and see how is the structure this side. So this is our daily chart, which is also bullish, and we can see that on daily we are still having a very nice bullish trend. We're still having a bullish trend line there, right? So us having a bullish trend line, if you are someone that's, you want to sell, maybe on your smaller time frames, you are getting reasons to sell there, you need to make sure that when you get there, you exit. Don't be like those people who will draw something like that, calling it a channel, and then they say they're selling there, and then they predict that they're gonna put their take profit there. It can work, but this thing has been touching here how many times? 4 times already. This is the 5th one. So how do you know that this is going to be the time when the price is gonna break that trend line? You can never predict such, like, you can't. So that's why when I'm giving you the videos here, I will tell you that we are searching for this type of a trade, and when we get it, we need to make sure that the next opposing structure, when it is hit, we are out. We don't know what's going to happen when the price gets there. It can still bounce and go up. It can still bounce and go up, and even end up going up forever and not break that bearish, this trend line, this lower trend line. So you see, so that's why you must never make that mistake of predicting that a certain trend line is going to be broken now. No, we don't do that. So for us, when we want to trade against this bullish trend line, we will trade from maybe wherever you're getting those trades, and then you exit. Should the price continue and break it, then you will say, oh, you see, now the trend line now is out of the way. It's the least of my worries now. When I'm taking a sell trade, I don't count the trend line anymore because it has been violated. So when you're getting that, that's when you can now start talking about your take profits being lower somewhere there. But until that obstacle is removed, you're not gonna make such a prediction. So you need to make sure that when an obstacle is hit and you have a trade, exit your trades or lock in some profits, tighten your stop losses, do something. You don't act like you don't see that there's something that is hit. So here we're on the daily chart. We can see that the price is okay. Let's go back to the weekly and just put a horizontal line where that weekly area of resistance starts somewhere. Yes, we can just put it there. So that's our weekly area of resistance, so that when we are on the daily, we can see where exactly the weekly is going to be hit. So if we are to go with a daily zone that goes with, because yes, we are around the daily zones, but they don't weigh a lot because of what? We are not in their direction. This is a resistance and we are bullish. So you see, it's defeated already, but it's a zone, yes. But if you wanted to sell from it, I do not trust it that much. Unlike if I was to take this one here, this one I trust it, this one here, and I will tell you why. First of all, yes, it is still a daily resistance, I get that, but it is inside a weekly one, and this is a daily trend. We are going to hit that weekly zone that we said when the price gets there, and because of this structure, that's where we are most likely gonna get that push to the downside, but we still exit there. Maybe that's when we can most likely gonna break it, but we're not gonna trade against it. We're going to exit here and see how the price is going to react from that trend line. So that's what we're saying. We are watching it as it is moving up like that until it hits that. Then let's see if we can't get confirmation around there, and then we will try and sell from there. Because currently, if you're someone that's been buying, you're basically just buying from this trend line. You wait for a pullback to the trend line, you buy. Pull back, you buy. Pull back, you buy, until that opposing structure is hit, that resistance is hit, or any bearish trend line is hit. That's how you should trade. So now let's check what we have on H4. So basically, this is what I've been teaching you guys. So this is our H4 chart. The structure is starting to open up a bit, and we still have the same trend line. You can put it there, and you can see that on this time frame, if let's say you are someone that's gonna say to me, this I'm not gonna take it as an area where I can put a trend line, so I'm gonna leave mine there. And there's another zone that is forming there, but it's not something that I will trade at the moment. And when the price moves higher than this guy, then you're gonna bring your trend line there, right? But for now, you can see that as much as we are trying to go up, the candlesticks that we are forming, it's not something that you should relax. When you look at this, when the price was not going anywhere and it is forming candlesticks that look like this, it simply says that their pressure is building up more and more. And you can see it's the same thing that we are getting here. So when you're having those buy trades, make sure that you still keep on pushing your stop losses up, because this I don't trust that. I do not trust that. And even when we started from the weekly, we saw that now the structure that they're making, it's not very convincing for the bulls. So the bears can still push them to the downside. Even here on H4, there are still signs that the bears could kick in. But remember, when you have a bearish pin bar, it's safer to stop order there, sell stop. Because of what? When you have a pin bar and the range of that pin bar is taken out, normally the price tends to continue in that direction. But the pin bar has to happen at the right location. That's the most important part. Now let's see, because here we can't really have any trade. Let's do H1. So on the H1, we're still getting the same structure. So on the H1, you can have this as your bullish trend line, right? So if you were to get a reason to sell inside, you'll be TP there. Should this be taken out, you're going to mark the resistance that pushed down and broke those structures, the resistance that pushed down and broke that trend line, and also areas of support. That's the one you're going to mark and say it is strong because of what it achieved, and it changed the structure from being bullish to bearish. Should you get a pullback, you're going to look for selling trades there. That's the only time you can sell and have your take profit lower. But if you're going to have a selling opportunity, a confirmation inside there, you are not going to look past this guy, because he is still active. This guy is still active, so you're gonna have your take profit there. And then maybe if you have got more than one trade, you can exit there, leave the other trade running, but you need to make sure you lock in the stop loss, put it below your entry point. Should you go down, now you'll say we are no longer bullish. Why? Because we broke the bullish trend line and we broke the support. So for that reason, I want to join the sellers that are going to the downside. Yes, I already have a trade. Maybe the price will give you another zone there. Then when you get to that zone, that's where you're going to sell at another sell. So that's the only time you can sell past this point. Yes, we understand that currently there's a lot of forces pushing to the downside, but because the trends on all these time frames are still going up, you need to make sure that you're going to take those sell trades with confirmation. Without confirmation, you don't have a trade. You need to be clear. You need to know when you can go in with a limit order and when you should be waiting for confirmation. So on this gold, because of what? As much as we're saying there's some pressure building up to push the price to the downside, but because the trends are still pointing up, we don't have a reason to go in without confirmation. We need to wait for confirmation because of what? The trade is against the trend. All right, so I'm gonna leave this one here. Hopefully you will get some reasons to take a sell trade, but remember, without confirmation you don't have a trade. But when you get a confirmation, you take your sell trade until the next opposing structure. If you're on H1, that H1 bullish trend line is your next opposing structure, you exit there. If you took a trade on H4, that H4 bullish trend line or H4 support is your next opposing structure, and then you exit there. All right, guys, so that's all that I wanted to share you with regards to gold, and then I'll give you another video tomorrow. So if you haven't subscribed, please make sure that you do so. All right, guys, I'll see you tomorrow with another video. Thank you.